Hello everyone. Welcome. My name is Mario Muñoz and we are pleased to have you here. This is our 8th video in the HortCalculator webinar series. Today we are talking about the HortCalculator, a financial tool that helps you to decide if a high tunnel is a good investment in spinach production. Topics include spinach market trends, high tunnel benefits, and financial analysis. The presentation begins now. Are data-driven decisions associated with greater farming success? Research confirms affirmative outcomes. Farmers employing data tools achieve enhanced profits and reduce risk as evidenced in studies from 2024. HortCalculator has been developed to assess the economic feasibility of investment on leafy green production, supporting informed and sustainable investment decisions. Let's explore the spinach market potential. The United States ranks as the second largest spinach producer globally, with a market value at $731 million annually, a 66% increase since 2020. There are some strategies for profitability. Consumers willing to pay premium prices for locally grown, organic, and sustainable spinach, providing production practices as transparent. High tunnel extend the growing season, enabling supply during low availability periods to capture higher prices. High tunnel details follow. High tunnels facilitate near year-round spinach production, yielding sustainable organic crops that command premium prices. These systems meet consumer demand for chemical-free produce. However, high tunnels involve significant setup and maintenance costs, increasing financial risk. The HortCalculator evaluates whether such investments are worthwhile by analyzing costs and profits. High tunnel advantages are detailed next. High tunnels significantly increase market spinach yields, particularly in winter and spring, compared to open fields. Losses before and after harvest are reduced due to protection from weather, pests, and diseases, enhancing spinach marketability and shelf life. High tunnel spinach exhibits higher water content, tender leaves, and slower spoilage. Through open field, crops may have more nutrients. A stable microclimate reduces disease and stress, but proper ventilation is essential. The HortCalculator role in evaluating this kind of investment is outlined next. The HortCalculator, a research-based tool, evaluates the economic feasibility of farm investments. Previously used to compare biological versus chemical aphid control, it now analyzes spinach production in high tunnels. Designed for farmers' accessibility, it processes farm-specific data to determine investments' viability. The inputs and outputs of the HortCalculator are described in the following section. The data entered into HortCalculator includes farm size, high tunnel area, and expected spinach yield. Sales channels such as farmers market and pricing and revenue. Costs for seeds, fertilizer, labor equipment, insurance, and taxes. Investment like high tunnels include changes in expenses and yields. The outputs include cost comparison between the current practices and the high tunnel use, profitability projections, scenarios for pessimistic, most likely, and optimistic outcomes. Break-even points for price or yield to cover costs. These analyses support financially sound decisions. HortCalculator development is based on data from 7 farms in Indiana, Illinois, and Ohio. Costs, yields, and expenses of small and medium-scale farms were collected via Qualtrics survey, ensuring the tool reflects real-world conditions. This empirical foundation enhances its reliability for farmers. A case study demonstrates HortCalculator application. A farm of 65,340 square feet allocates 1,056 square feet to spinach in a high tunnel from mid-October to mid-February, expecting 440 pounds yield. Sales include 154 pounds at farmers market, 105.4 pounds to restaurants, and 180.4 pounds to retailers, all at $10 per pound. Annual farm income is $110,000, with labor at $15 per hour. Costs include seeds, $32 for 16 ounces, manure, $7.68 for 96 pounds, paper pots, $64 for 32 units, totaling $103.68. Labor, 17.55 hours per planting, weeding, and harvesting at $15 per hour, hours per season, overhead expenses, and list all the fixed assets. For this case, we are trying to evaluate a high tunnel investment for $50,000 for 10 years, 7,040 square feet, and an increase expected between 50 and 60%. The percentage increase varies by crop, location, and year. Now let's talk about a cost comparison. Before high tunnel, cost total $975.30 or 92 cents per square foot. After the high tunnel, cost rise to $1,172.34 or $1.11 per square foot due to increased fixed and overhead cost. The HortCalculator clarifies this difference for the decision making. The profit outcomes. Before high tunnel, revenue is $3,300 from 330 pounds sold at $10 per pound. Costs are $975.30, yielding a profit of $2,324.70. The after high tunnel, a 25% yield increase results in 440 pounds, generating $4,400 revenue. Costs are $1,172.34, yielding a profit of $3,227.66. Definitely, high tunnel boosts profits due to higher yields. Sensitivity analysis examines how changes in key factors like yield and price affect financial outcomes. This slide compares results before and after implementing a high tunnel. We evaluate three scenarios: pessimistic, with a 30% decrease in yield and price, reflecting a worst-case situation, most likely using average yields and prices from the study as a baseline; and optimistic, with a 30% increase in yield and price, showing a best-case outcome. Before high tunnel, in the pessimistic scenario, we see a yield of 231 pounds at $7 per unit, generating $641.70, and in the most likely scenario, we have 330 pounds at $10 per unit, resulting in $2,324.70. In the optimistic scenario, we get 429 pounds at $13 per unit, totaling $4,601.70. These scenarios reflect a 30% decrease in yield and price for pessimistic, an average study data for most likely, and 30% increase for optimistic, showing worst case, baseline, and base case outcome. After the high tunnel, for the pessimistic case, 308 pounds at $7 per unit yields 983 and 66 cents. The most likely scenario shows 440 pounds at $10 per unit, generating 3,227 and 66 cents. In the optimistic case, 572 pounds at $13 per unit totals 6,263 and 66 cents. These reflect the same 30% decrease, the average, and 30% increase in yield and price. These scenarios highlight how the high tunnel boosts yields and revenue across all conditions. Break-even analysis determines the price needed to cover costs at different yield levels. This slide examines break-even prices before and after the high tunnel, across the same pessimistic, most likely, and optimistic scenario. Before the high tunnel, in the pessimistic scenario with 231 pounds, the break-even price is $5.49 per pound to cover $1,267.89 in costs. For the most likely scenario, 330 pounds has a break-even price of $2.96 per pound, covering 975 and 30 cents. In the optimistic case, 429 pounds requires a break-even price of $1.59 per pound, with costs at $682.71. This scenario shows a 30% lower yield and price for pessimistic, average data for most likely, and a 30% increase for optimistic, reflecting varying cost coverage needs. After the high tunnel, in the pessimistic scenario, 308 pounds has a break-even price of $4.95 per pound to cover 1,524 and 5 cents. For the most likely scenario, 440 pounds has a break-even price of $2.66 per pound, covering 1,172 and 34 cents. In the pessimistic scenario, 572 pounds has a break-even price of $1.43 per pound, with a cost of 820 and 64 cents. These reflect the same 30% decrease, the average, and 30% increase, demonstrating how the high tunnel lowers break-even prices across all conditions. Remember that you can access to the HortCalculator at the Purdue Horticulture Business website for videos and Q&A webinars. The HortCalculator analyzes cost and profit to minimize financial risk, supporting sustainable decisions for spinach and other crops. High-value markets, such as organic spinach, are targeted through pricing and yield scenarios. Enhancing profitability, investment like high tunnels, crop rotation, and new technology are evaluated for financial viability. Market opportunities and crop strategies are optimized, guiding farmers toward greater profit. We truly appreciate for staying until the end of this online webinar. We would love to hear your thoughts. Please take a moment to answer 2 quick questions by scanning this QR code. We look forward to seeing you our next webinar session.